Hi there. Yeah, Steve Goodey here, Property Tutors Wellington. I didn't really want to do this, but Sean Wood made me. Property investing war stories. They want me to tell a little story which isn't very complimentary on my part, I got to say. So struggling with this one a little bit, but yeah, here goes, right? 2006, I had a rush of blood to the head and decided that I was a property developer. It seemed like the logical next step to make after doing quite a few residential property investment deals and commercial property investment deals, and so I decided that I would develop some apartments. So I bought a site in central Wellington. It cost me a little bit, around $2.2 million for 750 square metres of dirt in a good street in central Wellington, and went about starting to get resource consent applications into council to get that done. Come 2007, and the property market crashed about 9 months later, and what happened to that particular piece of land was that Williams and Adams Holden car yard lost its funding and went bankrupt, which made 3 car yards right around my piece of dirt go fire sale, which impacted the market in that area greatly. So what it did was it made the land go from being worth about $2,000 per square metre to being worth about $1,400 per square metre within about 2 weeks. And that really hurts. So that put my value right down, which meant the bank came to me and said, Steve, we don't feel that your loan to value ratio is right, and so please either repay the mortgage or put $400,000 into the deal straight away. So I took a deep breath and I put $400,000 into the deal straight away. I lowered my loan to value ratio, lowered my risk to the piece of dirt and the property, and pushed on, kept going with the deal. The problem with it being was that I'd become what I rile against with my clients and property tutors now, which is a one-horse pony. I had one pie and I had one finger in it, and that was all I had. What I say to my clients these days is buy a $200,000 house and buy it 3 times instead of buying $600,000 house and having all of your eggs in one basket, so to speak. And so I wasn't taking my own advice, and that's you know, that can be terminal. So roll ahead a few years. The luckiest thing I ever did with this particular piece of real estate is made sure that it continued to have some holding income. It has always had tenants sitting in the property. It's always had money coming in off it, but I've had to feed it over that period of time. Sometimes that hasn't been very pleasant. Luckily, just very recently, I had a new valuation on the property as a completed development, which I'm pushing forward to get done, and that new valuation's come in very close to $30 million now. And so I'm not going to cry into it too much, but there was lessons learned, and I think the lesson there is if you're actually good at something and you can do it well, just do that one thing and do it many, many times and get better at doing it in small increments every time you do it. Because when you start playing with the big boys in property development and doing multi-million-dollar stuff, one small thing can be fatal to you, and it can knock you over. And I got to say, you know, hand on heart, I actually got pretty close. It wasn't very, very fun. It was stressful on me and my family, and I wouldn't wish it on anybody. But I'll tell you what, if you've got a small $200,000 property in the current marketplace in Auckland, Wellington, Christchurch, what I like to see in those small property deals, which I don't see in some of the larger ones that I got involved in, what you do see is a plan B. And I talk about this quite a lot in my events. A plan B is what's going to happen if plan A doesn't work. And plan B at the moment is that rents are high, interest rates are low, and normally you can get your renovations to be cash flow positive pre-tax if you can't sell them. And that's what I really like about the property market that we're seeing at the moment. So that's the lesson I'd take away from this quick video. Don't be too smart for your own pants, like I was, admittedly. Stick to your knitting, do stuff that you're good at, and do a lot of it, and get a little bit better at it every time. I've got a lot of clients at the moment who are doing those $200,000 projects, and they're doing between 8 or 9 or 10 of those per year, and making nice little money as they go along. And if you can turn that into a viable business practice for yourself, you're doing better than, in my opinion, 80% of property investors out there. So that's my lesson for today. Warts and all, it wasn't a fun thing for me. We're getting through it now, and I'm quite happy with where it's sitting at this stage. But hey, you know, there's a war investing story for you right there. Hope that was of use to you today. There's some other videos on this page. I recommend you have a nosy through them. Some of Sean's stuff's really good as well. And hey, we'll see you again. Thanks very much.